Welcome to TradeTheNBA.com. This is John. This report is for the 5th of June. And well, you saw it right there flashing in between potential sell in that. You're still below 33. That we had a spike move up, natural reaction to the DOC steel right here is on the reset mode. So, you're going to face every little dip is going to be, people are attracted and say, oh, better price, buy. And that goes until, we get a change where you have enough shorts that are actually interested in staying in the scene and a justification for them to do so. I mean, it's one thing to expect some natural retrace within a daily move, but you literally have to have a convincing reason. And of course, narrative-wise, you can come up with a million reasons why the market should go down. Um, Least of which would be inflation, because that is definitely the reason why you have these kinds of moves, because you have to price in the devaluation. And just there are no indicators that really take this into account. It's what we attempt to do with the adjustments that we've made in ours, because basic oscillators and that they don't understand that there's a recalibration in the baseline, and unless you're able to see that, you get lost in the idea of this overbought or oversold status. No, it's renegotiation of what the baseline price value of things is. We still have no change in oil whatsoever, so it just continues. And this is one of those things where you get into the question of inflation versus rate of inflation. And when you have elevated levels like this, your rate of inflation is going to continue to rise, meaning you're not just stopping at one increase, it is going to be an ongoing increase. And that's exactly what um, these prices suggest will continue to happen. It's the same thing that you get with money printing. It's a delayed impact because some people will obviously save, others will spend, but then there reaches a point where more and more people start spending because they believe they've saved enough, and that's the transition. That's when things get out of control quickly. Euro still supporting well over that 116 range, and um, also that's a discount on the dollar, which is strange because the euro isn't doing any better. So relatively speaking, you have all these currencies doing the exact same thing. The question is, what do you find that is not part of the currency? And that's where you get into gold. Um, Muted at this particular stage, that will change quickly, and you'll see a whole nother run in it. There's a lot of complications with gold simply because of the paper trade and that, and we've talked about it. There's already still a big difference between what it actually takes to buy the physical versus the paper product. There's a big difference between the two. Interestingly enough, though, the sell for Bitcoin continues. Just again, we've talked about this one for years. The inability to transition into a regular market stream, still the same problem it's always been. Finally, it was that brief period where the Iranians were requiring their payments in it from an extortion standpoint. But once the blockade began, that's what we saw. So it's not hard to see that play out in action. From the short move, boom, we went over 50% from that full retrace. And the turnaround was pretty clean right there. You ended up with the orange below the green, green rising, made it above the 23%. Caused a little buy configuration here where the magenta overtook the MBI white and on the 50K here at least, and then you just proceeded to go up until the transition sell took place. That earlier you'd already seen the split in the DOC, so what you had there was the continuing rise of DOC red, but as soon as the red plateaued, that was the end of the story. So it just and that corresponded to the magenta tipping over at the same time as well. So it's sort of like a confluence. You begin to see the momentum shift build. You have short cover rally going into that, and then when the shorts finally give up, there's just nobody left there to be forced to buy, and boom, you get that pretty strong retrace going back into it. And then, of course, that sets up a new buy configuration, which is the steel sharply turning around. At the same time, magenta hasn't quite crossed yet, but it's potentially about to. So you're at the 50% level right there. You probably get a little more sideways action, and then you get a renewed interest. And it's a question now whether or not that new money that has arrived feels that they've gotten enough of a discount or they need more. And if they wait, then we'll see a further dip so that they can get it a little bit cheaper. They would just keep following that. I mean, we see it pretty clearly intraday. I mean, we look at this intraday move. It was pretty much straight up with a lot of little teeny back and forth, spurts back and forth, and it just continued to, what do we call that, the climb of the wall of fear. Then you just reach a point where it gets so consistent that people start saying, "Okay, I got an advantage to start selling into this," and then it reverts, and that's when you start to see the decay collapse. And the guys who sold into it are just laughing because they know what their retrace points are, and when their turnaround begins, you can see that people call that kind of thing compressed double bottom. It's not really double bottom because you're coming off of the higher elevation, but what it is it's an indication of we tested a low particular area and there isn't enough new selling. So we pop up from there because we're buying up a lot of it, but then we stop, fades back down again, and we see there's still no extra selling below this point. So we just start buying back at that particular spot, and that leads to the next rally. And then they just don't stop the rally from going and continue to fuel it a little bit while selling when the pops of it. So, yeah, that's pretty much the long and the short of exactly how you just see these things compress, rise, and then the overall narrative as to where things are economically, it's still progressing. So things are holding on. And as long as that's the case, the bias is still to the upside for things overall, with corrections in between. And when you look at that daily, where we are, this range between the 76 and 100 is still quite large. And until that evens out, that's going to take some time unless you get a significant dip. So that's the long and the short of it. As always, anything relevant, I'll put on the team chat. But have a great end of week trade. We'll talk to you later.